could be your sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for Bitcoin, and then let's go ahead and get it started here. First off, on this hourly chart, what I want to point out first is this black trend zone. If we look here at this image on the daily, this is the ascending trend going all the way back to the double bottom, what is currently the lowest low for Bitcoin in the most recent bear market, right here at 15.4 thousand. Going all the way up to this double top we had set, this sideways action at 30,000. See the clear importance of this trend line as we recently, heading into October, end of last year, we're heading back towards around 30, 31, 32, 33,000. Finally ended up breaking this trend line, and we're holding above it. But if we take a look here at this hourly chart, you can see right here going all the way back to around the 12th of January this month. Bitcoin for the first time, once it broke back above this around the beginning of December of last year, it's finally coming back below that. So again, I have here denoted the price ranges I've been mentioning, broadly speaking around 35 to 38, 39,000. I think there's good reason to believe that would be an area for support if the range of around approximately 40,000, I'd say down to around like maybe 39, like I said, thousand being the upper bound for that. And then again, as I've been saying for quite some time at this point, definitely room to come down to around this red ellipse right here at around 30,000. Even let's say we do see this crash down to this area, as I've been saying, and if you're looking in past history for Bitcoin, around 20 to 40% is typically the healthy retracements in a bear market, or a bull market rather. Typically going back and looking at all the bull markets, there's never a drop that's significantly below, or even really at all below 40%. So I mean, if we just take the retracement down here and see that 40% basically lines up with essentially 29.5 thousand. So I think worst case scenario here is around 29.5 thousand approximately. Could, wick a little bit lower than that, but so I think that at approximate $29,000 range is going to be the worst case scenario. If I zoom in here real quickly, actually, let me go back here and look at this first. So going back to September, October of last year, when you can see we were in this sideways action. We were below this 800 EMA, this dark blue or this purple EMA. You can see we finally started, Bitcoin was wrapping around and oscillating around it, finally broke above it as we headed into this bullish price action we've seen recently. Ever since then, it had stayed above it. And then finally zooming in here, we can see that in this slightly upside action that we've seen so far, you see back here around 30th of December, there was a bounce on it. We had this major wick right below it, but essentially the price bounced on it. Now we can see that recently with this sideways, really downside action we've seen, this is the first time that it's gone below it. Now if we look at the current hourly candle, there's still 47 minutes left in it. There's still the possibility that there is at least definitely the possibility the Bitcoin closes this hourly candle above it and it continues to move higher here. So this is currently sitting at basically 43.2 thousand at this point. Recovering this trend line, this upper one sits, depending upon when it happens, is roughly around 43.5 to 44,000. The upper trend line is going to be comfortably around 44.5 thousand. The 200 EMA is also going to be important to get back above, which currently sits around 43.7. So basically 44 to 45,000 is going to be important to recover here, looking at these lower time frames, and then obviously especially the higher time frames as well. So moving in here to this 4-hour chart, what I want to point out here is, again, this basically shows all of what I showed on that prior hourly chart. We can see the importance here of this 800 EMA going back to this recent local bottom range from around August 18th of last year to around October 15th of last year, when it finally flipped both really the 800 more significantly, but also the 200 white estimated moving average as well. And then we entered this again. I have another rising wedge pattern here. These are typically this isn't actually, it's not technically a rising wedge according to the textbook trading patterns, but clearly this is still a wedge-like pattern, and it is rising. It's more like a bull phone, or not a bull phone, a megaphone like channel. And then again, going back to this hourly chart, if we were to lose that pattern on that 4 hourly chart, these price targets that I mentioned in both these two ranges right here are also what corresponds to this if it plays out in a bearish sense. But the main thing that I want to point out here on this chart is if you look down here at this RSI, we can see going all the way back to August that this was the lowest the RSI had set in the most recent local low range. It basically came down to 1 on the RSI ever since then. We can clearly see how important this orange range has been all throughout this price action and its trading recently. The price came down to that. You can see that as the price was currently at lowest around approximately 42,000. This is the same levels that it was at back when the price was at its lowest local low recently at approximately 25,000. So I think that's roughly a good thing to be seeing. The RSI at this point has moved all the way up almost to the 618, yet the price hasn't moved that much. We can see on here that the 200 estimated moving average on this 4 hour chart is basically acting as I showed here on the hourly chart. So again, on this hourly chart, the 800 EMA is what price needs to break above. But on this 4 hour chart, so you can see the 4 hour candle is just right below it. If we can get a 4 hour close above this, that could be a good thing. But then after that, closing above this 50 estimated moving average and its purple band is going to be really the big thing on this 4 hour time frame. But let's say even if it closes above it, it could do something along these lines and continue to trade sideways here and then finally have a dip down at this point. I definitely do think it's very possible that over the next week or so the Bitcoin continues to go lower here and it could come down. We look at this 800 EMA currently sitting at around 37.3 thousand, roughly lining up with the upper range that I pointed out here, right here in this range on the hourly chart. But moving into the daily chart, we can see here again, it's still essentially the same time period that I'm zooming in here on, but we can see again we have this rising diverging channel, I'll just call it that for now, where it's widening as time progresses. We can see the daily candle right now, they're finding support. They have been going all the way back to around the 14th so far. This current candle is showing some promise. Now it is, as you can clearly see, very small body, but some pretty drastic wicks to the upside and downside, which, again, with the Heikin-Ashi rules, could show some momentum change here. So, I mean, we could bounce up, but it also could be denoting that we're going to go lower as well. Again, we have the price ranges roughly right here in this range, 35, 36, maybe 37 to 39 at highest, which 39,000, like I said, is roughly going to line up with basically the 40,000 that we've already found support on. It's just roughly going to line up with this daily volume vector zone right here. But lastly, this roughly symmetrical triangle pattern that I've been pointing out, and the breakout zone, this blue zone, so far it happened. If we take the price target and we then move that to this breakout point, you can see that it was basically met. It even went a little bit higher with this wick, but that was basically met. So I'm going to go ahead and actually remove this triangle for now, since that's already laid out. But again, lastly, you can see here on the daily, so again, the 4 hour, the 200 EMA was important, and then 800 EMA on the hourly. On here, you can see that those two on the daily chart are roughly functioning right now as the 50 EMA to the, I believe this is the 5 EMA, the green estimated moving average, right now finding support along the 50 EMA in this band, and then in parallel and confluence of that with the bottom support of this pattern. I think overall is a good thing. Again, like I said, I think at this point it's 50-50 that it does see a more significant pullback. I don't think it's necessary, but again, I think it's definitely possible. If we look here, which this is what I posted yesterday on the community tab as a quick update, not only are we finding good reason to believe a bounce will be found here towards the upside once more, the RSI is also basically doing the same thing here. It didn't quite come down and touch it just yet, but it roughly did. But again, so I mean, we could totally still, maybe we even come up here for a little bit and then get rejected once more, and then we finally come down and maybe we bottom out somewhere in this area, maybe we come a little bit lower and bottom out here. Who knows? Whether or not, so let's say we do get this 40% drop that I was mentioning earlier. I would have to say that that wouldn't take any longer than maybe halfway into February. I think if we do get a pullback, which I believe I've been saying for quite some time in a number of my recent videos, that it's going to be a rather quick, pretty quick drop, and then a pretty quick recovery, something like a V-shaped recovery, as I've mentioned in the past. I mean, the RSI totally could also, like if the price just jumps off the cliff, the RSI would definitely end up breaking this right here and moving towards the low of the fib range that I have set here on this daily chart. When it comes to moving towards the upside here, if let's say the price is going to continue to stay within this channel, let's say we get a bounce right here, for example, and we continue to move higher roughly towards the end of January, beginning of February, maybe first week of February, we hit around 60,000, roughly in this area right here, 60, 61, 62,000, if it does something along those lines. But given the fact that the ETFs were approved on the 10th this month, BlackRock at this point, I think, owns somewhere around 11,000 Bitcoin, and that's likely going to continue to increase pretty rapidly, especially the other institutions that had their ETF applications approved, like Fidelity and Vanguard. So whether or not we get this drawdown or we end up moving towards the upside here, I think there is good reason to believe that this channel would end up being broken within the next move. If the next move is going to be a pretty momentous move, I think it would likely break that, heading towards the previous all-time high, busting that 60,000 cap that I'm said towards 64, 69, and pushing eventually above 70,000 over roughly the next month and a half or so. If, again, like I said, if we don't get that pullback. So if we look here, moving into this weekly chart, this is a very, I first went over this chart probably maybe around a month ago. I'm not quite sure exactly when. Actually, last time I went over it, because I went over it when it crossed, would have been around the 30th, maybe the last few days of October, definitely the first week of November of last year. So again, just to reiterate what this is pointing out, this is the average sentiment oscillator, basically just a indicator that basically pairs the sentiments of bullishness and bearishness and gives you this oscillator. It gives you these crosses. You can see starting out going all the way back to really the beginning of this bear market. So this would be December, November 2013, beginning of phase 2 for Bitcoin cycle 2. We see this first bearish cross, this pink dot. Another cross, that's the second cross, purple. These are really insignificant crosses, the purple ones. We have a third cross, fourth, fifth, and on the sixth cross, which is where the turquoise bubbles sit, the bull market begins. Price eventually crosses the yellow dotted trend lines here, which these are roughly lining up with the 50% of the prior bear market. And then we come up and we have this point where the oscillator for the first time reaches this turquoise zone. So again, we move into the next, so phase 1 of cycle 3, beginning in December of 2017 at approximately $20,000. We see the first bearish cross, the bear market is initiated. We then have second, third, fourth, fifth, and then sixth turquoise cross, pretty much right at the halving in May of 2020. Bitcoin then moves to approximately around 44,000 in January 2021. It's the first time that it reaches again this upper turquoise range after the turquoise cross, the sixth cross. And then the most recent bear market, May of 2021, we see the bearish cross pink. We have 1, 2, 3, 4, 5, 6 right here. Again, like I said, October, November, we broke, again, each of these times we're breaking this horizontal trend line as well. And now we recently just came up into this turquoise zone. And you can see each of these times, each of these green lines with these green bubbles, when the ASO reaches this point, you can see there's a retracement basically every single time. And this first one was 35.42%. This second one at most was 31.24%. So again, like I said, this is lining up with the rule of thumb I mentioned in a number of videos ago, 20 to 40% during bear market. So now we have reason to believe that according to this ASO, there is perhaps, basically what I'm saying is perhaps this chart is telling us that this drop, this pullback that I've been mentioning for a number of weeks at this point is solidified due to basically this indication right here. So if we take it from this wick, the highest one I said was like 35.42. That's close enough. So that would take it down to 31.5 thousand. Then that's not even the worst case scenario. Like I mentioned earlier, that's roughly worst case scenario. That's basically in the bubble of the worst case scenario that I mentioned, going down to around 29.5 thousand. I believe I mentioned that on the hourly or the 4-hour chart. That also would take us a little bit below this, obviously, this very important trend line. You can see it obviously didn't do that back here. It didn't take it below this one, even going back to this phase 2 of cycle 2. You can see this one's actually would be more similar to the current one if we do indeed get this pullback with this indication going back down to basically, and it doesn't have to come down as low as 35.42%. Like I said, it's just got to at least be 20 to 40%. So 20% sits at 38.8 thousand, and then let's just bring it down to an even 30. Basically going to be 34.2 thousand, and it would hold above this support right here. Lastly, I just want to go over, we can see this RSI. For those of you who are familiar with the content, you'll remember this RSI. I've been going over this RSI for quite some time, and so far it's been very accurate in terms of past history as well, predicting what's coming next. We finally broke out right here, and then this descending channel, and then had this curve linear descending or sloping downwards channel as well. The RSI very drastically dropped recently, which I thought that was kind of interesting just to see how, I mean, it almost went straight down. I think it's very similar to, now it could be also very similar to May of 2019 when we were heading into this intermediate top. For those of you, again, familiar, I don't personally believe that this is going to happen. Like, for example, basically that this is just an intermediate top like this one back here, and then we're going to enter some sort of like medium-term downtrend back down like maybe 20,000, and then come up to a bull market, maybe leading into like first quarter of 2026. I don't personally lean that way currently. Now, let's say that if Bitcoin loses 30,000 significantly, then I'll start to think that that's more possible than what I currently think and what I've been more recently saying. But it also could be something similar to, again, like I said, right here, which lines up with this more recent, this green, this dot up here with the ASO that I was pointing out. And also, I quickly, again, just update this MACD. You can see that as long as this MACD doesn't, now I'm not saying, now if we get a pullback, I definitely think it's possible to see the MACD come down a little bit below this. But as long as the MACD doesn't do something like this and drop down really drastic, I don't think there's, well, if the MACD does something like this, then that's probably going to be that medium-term downtrend playing out like I was just mentioning. But as long as this is, I would say it can roughly hold this area right here in some sort of pullback, and I think this symmetrical triangle will end up playing out. As I've been going over this symmetrical triangle, this MACD, for maybe since around June, July, August of 2022. So almost, I mean, by the time this bull market plays out, what I'm leaning to right now, almost 2 years that I've been going over that. But lastly, if we look at this RVI, we can see that, again, the way it looks right here, to zoom in on this, you can see how this right here looks very similar, again, to this most recent, this prior indication I was pointing out on the ASO. So again, I mean, we totally could, especially if we end up getting this cross. It hasn't, actually zooming in as much as I can, this cross has happened so far. So at this point, factoring in this, factoring in everything else I'm going to chart, I definitely, it is starting to look a little bit more like over the next maybe over the next week or two, maybe even over the next like month and a half, like I said, that we could see a pretty quick pullback, maybe something like this down like halfway into February, like I said, and then we'll see some sort of quick V-shaped recovery for the upside. We go back to let's see right here, August of 2016. This one lasted roughly 1, 2, 3, 6, around 9 weeks. So I mean that was about 2 months right there. I mean, it definitely could also, if we do get a pullback, it could be that in that length as well. Which just to entertain a longer term bull market, which again, like I said, for those of you familiar, know that I think the bull market, currently I'm still leaning towards the bull market top happening this year around, at this point with my most recent updates, around June, July, August. But I mean, there's totally the possibility that we end up doing something along these lines right here, and we have a more drawn out bull market like this. And also, as I pointed out in the past, the bear market that we saw right here from 2013 to 2015, and then comparing it to 2021 to 2022, the most recent bull market, you can see that they basically did the same thing, just a little bit different. We had this initial drop down, and we had an M right here, and then an M in the bottom. Let me point out this M right here a little bit more clearly. We have that M right there, which formed the brunt, the majority of the bull market. The only difference here is that this time around, we had this initial drawdown, and then the top, or the price came back up and made a higher high, but still ultimately came down. We made this first M, which composes the majority of the bear market, and then we had this last M right here, which would be, that last M would be synonymous to this M right here, which this M back here was sideways, and this M right here was tilted towards the downside. So let's say, again, like I said, let's say we get something like this, and we see the price push up above, you know, like around 200, well, 180 to 250,000 is what I have been saying more recently. This fractal right here pushes up towards almost 800,000. I don't personally think that is too likely at this point, but it's definitely possible, which actually brings me into what I wanted to touch on next. Right here, where you can see this article on the 11th, Tron founder Justin Sun issues massive prediction after landmark Bitcoin ETF approval. Justin Sun expecting Bitcoin to reach 8 billion people globally after ETF approval. And then scrolling down, we can see what he said for the projection. Despite the long-awaited approval, the current price of Bitcoin standing at $46,740 has seen a relatively modest increase of 2.41% in the last 24 hours. Nevertheless, market observers remain bullish on the future, predicting a potential rally for Bitcoin. For instance, crypto analyst Michael Van de Pape is projecting that Bitcoin will reach the substantial range of 300,000 to 600,000 in the current market cycle, which again, like going back to this chart right here, let's say we do get a drawdown. Well, this drawdown you can clearly see is not as significant as like what I was saying, but still, I mean, from what he said, this pattern would roughly be something that would play out if it hit its highest of around 600,000. We look here at this CNBC article, just again, Kathy Wood's been saying basically roughly around the ballpark range of 1 million by 2030 for it, you know, maybe a good year or two longer at this point. But basically what she said in this video was their base case is 600,000, and then right here, bull case is 1.5 million by 2030. The bear case, she says, is 250,000 by 2030. Now, for those of you who have kept up with my content, you would know that I basically agree with this. I think somewhere around 1.3 to 1.4 billion in a bubble around 2030 is likely. So I think at earliest 2029 is when this could happen, but I think that more likely late 2030 and then 2031, 2032 is going to be more likely when Bitcoin is hitting, especially pushing towards 1.5 million, which would brings me into this chart right here, which this is a daily chart. I take it all the way back to the beginning right here. This is the beginning of my phase-cycle theory. So this is the very first cycle for Bitcoin. Now we had going all the way back to the beginning right here, October 6th of 2009, all the way up into this rough point right here around June, July of 2010. This price trading was basically what I refer to as incoherent. It wasn't really printing any coherent pattern. If we zoom in here, we can see that there's these 4 peaks right here. What we'll see right here basically is, and I can zoom in and show you that what I see at least is I see a price come down and it makes this double bottom, and it essentially just goes sideways, and it basically respects that range outside of obviously this wick right here and this wick right here. I mean, these wicks also could be random as well, in terms of like they didn't actually represent the price action. Sometimes a lot of charts will show some crazy wicks that aren't actually part of the price action. But even if this is truly a part of the price action, these were just some major wicks. You can still see that the closing of the candles respected this double bottom right here. You can see that nothing ever went below this first bottom right here. But we see that W pattern after the yellow dot. We have really the first peak, the first bull market right here in the red. We see retracement up into the second peak, blue. We then have this kind of slanted downside right here, and then we see this the most major bull market within this first cycle from July 10th to June of 2011. Okay, and then moving here to this monthly chart, we can see right here that from this point in the beginning of the chart up to this first yellow dot was everything I just went over. And then I zoom in here real quick, we can see that, again, we can see right here, we come down, make a bottom, we come back up, we have this drop back down a little bit, just go sideways, and then we come up to the first peak right here, then we have red, again, like the first cycle that I mentioned, first peak, see retracement, some sideways action, consolidation, bullishly, come back up, we have the blue peak, and then we have this kind of just slanted diagonal downside of a bear market, and then we come up, we have this longer term, more major bull market right here into the yellow, which would be it's the end of right here from yellow to yellow. This is the second cycle. Phase 1 would be the first yellow dot to the blue dot, and then phase 2 is going to be the blue dot to this yellow dot. So the ending of phase 2 and the beginning of phase 1 are the same thing. And right here, this would be, we're currently looking at roughly half of the cycle, the current cycle 3 that we're on, this being phase 1. We can see the W again right here, coming down to this low, intermediate high, July 2019, heading into the March crash. We then come up to the red dot, the first peak. We then have this retracement right here, which was more drastic in terms of it being a bear market this time around than it was last time around, and even within the first cycle. And when we come up, we haven't done it just yet, obviously, but then according to this phase-cycle theory, this is why I believe, again, going back to this chart, this is why I believe something like what I am pointing out right here is more likely than that prior fractal pattern heading up towards it, possibly highest like 800,000 by around the end of 2025, early 2026. So what, again, like I said, 180,000 to around 220, 230,000, could push up to, I think at highest 250,000, but I think 180 to 230,000 is very reasonable. This is what also corresponds with the Fibonacci retracements in terms of each of the phase bear markets, we can see that blue peak right here specifically was at the 2.321, but you can clearly see that generally it was just within this green, this kind of light green range. If I do it for the phase 2 bear market, we can see this high was also within the exact same range. And if I do it for the current phase 1 bottom right here, the cycle 3, we can see that this met the 1.618, just like the red high did back here. And we have yet to meet this green range with a 2.321, which is where the last phase 1 ended off in cycle 2. Sits at $225,965. So that's why I say around 230,000 I think is the most reasonable at highest. Again, 250,000 could be on the table, but roughly that's all still in the same ballpark anyways. Now lastly, if I zoom back out here, we can see each of these on the price chart. These horizontal lines, each of these follow through with these purple candles, the increasing bearish downside volume candles, these vector candles I pointed out in the past. Whenever the price crosses above these, you can see that basically the bull market begins after they're printed. Now, coinciding with that, we can see here on the RSI that is once the RSI, if you go all the way back to, well, going all the way back to February 2013, once the RSI crossed the 618 on here, the bull market was already on its way. It already began. December 2016, you can see it's the exact same thing was already happening right here. We moved to October 2020, again, the exact same thing is happening, and this time around, it happened in December of last year. So according to this is a monthly chart. This isn't particularly showing any reason to see downside, like I was pointing out here on this chart with the ASO and even the RSI and the RVI earlier. So this being a weekly chart right here, this being this right here being a monthly chart, could be bringing a little bit more validation to not seeing a more of a significant pullback. Now I think it's definitely possible that, going back to this chart, I mean, this drawdown doesn't have to be as lengthy as, like I was saying, this one back here in July of 2016. It could be something similar to the one right here, which is actually within the current cycle and phase that we're in, which perhaps could be more likely, where we basically just see maybe 2 weeks of candles that have small bodies and drastic wicks. Maybe we even see, like, for example, let's say this current candle closes roughly how it looks now, and the next candle opens up and it has a very small body, and it just sees a massive wick that draws all the way down to maybe this horizontal line right here. I mean, that's totally possible. It'll be something similar to basically just this single candle right here at the March crash. Let's say we just get literally this one candle right here that represents this major wick of this March crash is printed as our next candle, and that's literally it. After that, everything's quickly bought up because the ETFs and plenty of other bullish reasons for Bitcoin right now, it's just quickly bought up. We see a V-shaped recovery towards the upside. I definitely think that's also just as likely as possible at the end of the day. The last thing I want to point out on this chart is this. So each of these indicators I have on here, this is probably one of the best charts I've made so far. This compiles the trader's rally indicator that I use. So the color-coded candles, the pink ones, the green, the red, and the purple. And we have the RSI bar candles. That's going to be the turquoise candles. And the pink. For the trader's rally, if I said pink, I meant to just say green, red, and purple, and black and white. But the RSI bars is turquoise and pink. And I put the correct inputs in just right enough to get it to line up with the pi cycle indicator, where every single time we start to see these pink candles is when we're starting to close below the pink moving average of the pi cycle indicator. You can see here each and every single time. I also redid the inputs I had been using in the past to get these pi cycle lows right here more accurate towards the end of the bear market, closer towards where the actual lows were. This one's right here is also made a little bit better with this candle right here basically being the lowest, roughly the lowest candle close. Now if you're interested in seeing these inputs right here, with the upper one being 471, then 319, 360, 113, and then the time interval has to be on the daily for this to look the way that it does. But so far, I think this is definitely using these 3 indicators along with these ones, mainly just the RSI down here. This will be your best bet, and kind of independently pointing out when you think Bitcoin's going to top out, and likely along with Bitcoin, Ethereum and the altcoins are going to roughly, obviously, as they have in the past, historically top out around the same time. Lastly, I just wanted to point out this rainbow chart. I posted something about almost 2 weeks ago. Main thing I want to point out is for 2024, the all-year range is approximately 140,000 to 330,000. And for 2025, the range is approximately 190,000 to 440,000. Which again, that also, I mean, that affirms my current phase cycle theory and the price projections. It also could push a little bit higher, could fall through that fractal pattern I was pointing out earlier that takes it, even though this doesn't say as high as 600, 700,000. We move to, let's see, like I was saying, Cathie Wood by 2030. We move to the very beginning of 2030, roughly right around here. We can see that the historical high ranges encompass a value of 700,000 to 1.18 million. Now that's basically, this is the first month, 5th day of 2030. Again, basically, I mean, roughly Cathie Wood and my projections would be met. Now if we move a little bit further, let's move to, let's see. We move to, I'll just go to halfway into 2031. Halfway into 2031 creates a range of 986,000 to 1.6 million. If I move to halfway into 2032, we see 1.2 million to almost 2 million overall. So, I mean, whether or not, for example, you take Cathie Wood's take, even Michael Saylor's also been saying roughly 1 million by 2030. And also with what I said, the Tron founder Justin Sun said, my phase cycle theory that I've gone over plenty of times in the past, basically predicting somewhere within a bubble drawn around 2030. Like I said, could be 2029, could also be out to 2020 or 2032. I think somewhere around 1 million to approximately 1.4 million is what is going to be met within that period of time. Last thing I want to point out is, again, with the recent approvals of the 11 Bitcoin ETFs on January 10th, when gold had its first ETF approved back in March of 2003, it had a 6.0142x in price. Basically, only went up from March of 2003 to August of 2011. Obviously, we had these retracements here and there, but overall, it essentially just went straight up. There was a second ETF somewhere right here around in 2004 as well. So, I mean, if gold did something like this off of one ETF and now Bitcoin has 11, I think that really doesn't need much explaining. And it could definitely completely, which chart was it? This one right here. Like, for example, my phase cycle theory and the type of bull run that I think we're going to see, I think it's completely possible. Obviously, at the end of the day, I'm not saying that I know what's going to happen, and I can definitely be wrong, and I'm very open to that. But the point I'm trying to make is, at the end of the day, because of the fact that there was 11 at one time, all 11 of them approved, all the ETFs approved for Bitcoin, it's totally possible that, we see basically, let's see right here, let's go roughly within this bubble right here, we just see a steady rise leading into maybe even 1 million somewhere within first half of 2026. Now, Cathie Wood, basically that would be something that would roughly line up with her projections, maybe somewhere more around 600, 700,000 rather than around 1 million by 2026. But that's definitely possible where we just see a more gradual bull run here rather than this very quick and rapid bull run I've been leaning to for many months at this point. But outside of that, that was all that I wanted to talk about and go over in this video. So again, hopefully you enjoyed. And again, none of this is meant to be financial advice. But all of that being said, I hope you all have a blessed day.
Ooh, I'm regretting now, won't I see you forever, start to